If you've been watching the Central Arkansas market, wondering whether right now is actually the right time to make a move, whether you're sitting on a Maumelle home thinking about selling, or you're tired of renting in Little Rock and ready to buy, the data that just came out really tells a clear story. And it's probably not what your neighbor or social media is telling you. I'm Amanda Galbraith with Arkansas Property, and I'm going to kind of walk you through 9 different charts that show exactly what's happening right now and what it means for you in our area here in Central Arkansas. So if you want to know more, you like what you're hearing, make sure that you like and subscribe to the channel right below. So we're going to start off with a couple of things, which is what are buyers most concerned about right now. And it's interesting because this particular slide that you see here, the same things people were worried about last year are what they're worried about this year. That part really didn't change. But in Q4, prices were the number 4 concern. In Q1, they fell to 9%. It is half of what they were. That's a fairly big shift, I guess, but we're still not talking about a huge number of the population. So it's not pricey. Buyers in Central Arkansas, just like nationally, have stopped expecting prices to crash. That means we're not going to see in 3, 6, 9 months probably housing prices continue to just go down. Magically. A, it's never happened. B, it's not going to happen. We continue to see an appreciation. It's not the same appreciation that we saw maybe in back in the golden days, back in the COVID days of 21, 22, but things are not just going to quit appreciating. What does this mean for Maumelle sellers? Where buyers aren't waiting any longer. So now's the time to get your house on the market. So buyers in Central Arkansas are no longer most worried about home prices. That's not their greatest concern. As of Q1 2026, prices ranked dead last among the buyers' concerns. So today's buyers are watching the economy and they're watching mortgage rates. More on that just a little bit later, which means waiting for prices to drop is just not a winning strategy if you're here in our marketplace. So next, let's talk about rates and where they currently stand. So they are actually at their lowest level for the last spring market seasons. So in real estate, the spring market is always kind of the kickoff to the real estate season, as we call it. And rates right now are lower than they've been the past 3 seasons. We're right around the 6.25 mark. And that's the lowest number that buyers have seen in the last 3 springs. So, let's just take, for instance, 2024, we were a whole point higher. We were at 7.25, so well above the 7% mark. And then in 2025, they were in the high 6s. So the translation for a Central Arkansas buyer, or what that means for you who waited 2 years, well, okay, if you waited 2 years from 2024, then you may have a lower interest rate, but prices have continued to increase. And have you offset that now? So now you're actually going to pay more for the house. You just are going to pay a little bit lower interest rate, and maybe you could have refinanced that and actually saved yourself some money. So let's talk about now, what do we think is going to happen? And obviously, I don't have a crystal ball sitting here on my desk, so I don't know what is going to happen exactly in the rest of 26 in terms of interest rates. But I have some really great friends in the mortgage business, and there's nothing that shows us that rates are getting ready to plummet. So the concept of I want to wait because rates are going to fall, and they're going to fall magically and drastically, really isn't a great solution, because we have no indication that that is getting ready to happen. So we've got 3 really major forecasters here that we're talking about, or sources, if you will. And those are Fannie Mae, the Mortgage Bankers Association, and Wells Fargo. And all of those are showing that they're forecasting rates to be right about where they are right now at the end of the year. So Nobody's planning for this dramatic dip that some people are sitting on the sidelines waiting on. So if you are sitting around waiting for 5%, if that's your strategy and you're a buyer, that's really, you're betting against the three biggest forecasters here in our country. So I guess best of luck to you, but probably not your best strategy. So now let's move to, in just 1 year, rates have moved down a little bit, and here's what it saves you, right? So how do I know if rates were to go down, how much more buying power essentially do I have, or how much am I saving per month? So if you had a $500,000 loan in January 25, with those rates, you're looking at a principal and interest payment. And again, this is a guesstimate. I'm not here to tell you this is your exact payment. Would have been around $34.14 a month. That same loan at where we are now, which is a little over 6.32%, runs you about $3,100. So you've got a little bit of a savings, about $300 per month. So now let's scale that to our marketplace. We're not, our general market, if you will, or our average sales price in Pulaski County is nowhere near $500,000. So a $300,000 loan is a little bit closer to where we tend to be on our average sales price. With that same drop, saves you $188 a month. So if you think about that, okay, it's saving me $188 a month, but I paid a 3% appreciation at least because that house appreciated for 3%. Does that strategy still work for me? And especially when we have no indication that rates are going to fall that much in the current year. So mortgage rates in Central Arkansas are currently, like I said, averaging around that 6.25%, 6.3%, which is the lowest level in 3 full years of our spring home buying season. And major forecasters, including Freddie Mae, Mortgage Bankers Association, and Wells Fargo, project that they're going to stay really, really close to that. We're not going to see a huge discrepancy over the next year. So if you're waiting for rates to go below 6, you're just going to pay more for the house because you're going to be waiting for quite some time. So the next thing we're going to talk about is higher policy rates in on supply. So we've been talking about supply here in our marketplace for quite some time. And when are we going to get back to the supply levels that we had pre-pandemic? And we've made that mark. We're really close to where we are. We still don't have near as much growth in terms of inventory as the rest of the country. So for us, we've got, a 5.8% growth. So we're moving upwards. But one thing I want you to know is that prices were really kept high despite the fall in demand. So people don't have to sell. People are not in positions where they have to sell, even with this increased inventory. And so because of that, we have not seen a fall in pricing. And I don't think we're going to see a fall in pricing. So it's still, our market here is still tighter than the majority of the country elsewhere. So again, let's look at this graph, where we talk about the inventory growth, and we see again that we've grown the slowest in the country in our region. So we're in the southern region. If you compare that, let's say, to the Midwest, up almost over 13.5%, or you talk about the West, which is well over 10%, we're not seeing that kind of increase in our market. So it's definitely tighter here than it is in the rest of the country. So where did those new listings grow in March? We don't have the April data just yet. This is from March. But if you look at Arkansas, that's a 14% growth in new listings from February to March. Now, part of that is seasonality, right? We're entering into this spring selling season. So that's definitely part of it. But even at 14%, we are well below the national average, which is over 21%. So we're still pretty far below where the national norm is. So we've got more sellers coming off the sidelines and putting their houses on the market, but not as many as the rest of the country, or not as quick as the rest of the country. So right here in Maumelle, we've got, right around 85 to 100-ish active listings as of this exact moment. And we've got an average market time. Ours is a little skewed. We've got some new construction, etc., but we're right around a 40-day market time, and that value year over year in Maumelle still kept up. We're seeing an increase in pricing still, so we've not lost that. It's a little bit slower in this little niche. It's around 2% versus the 3% in some of the other pockets of the state or the city. But we still have a lot less competition here for sellers than places like, let's say, Tennessee or Texas or somewhere up in the Midwest. So for buyers, we've got more options than we've had before, but we are not flooded the marketplace. And because sellers don't have to sell, we're still not moving to a true buyer's market. So let's talk about what happens because inventory remains limited. So because that inventory is still not where it is compared to the rest of the country. For instance, the chief economist over at the National Association of Realtors, his name is Lawrence Yoon, he has two big takeaways. That the median home price rose to a new record high in March. So again, we have no indication that home prices are falling. And the typical homeowner accumulated $128,000 in wealth over the past 6 years. Think about that in terms of an investment. You are living in the house. You're not putting away extra money every month. It's a true living expense. And you've earned yourself $128,000 just by living in that house. Now, that's the average American. Obviously, it differs for each little portion of the region. So that's the part that nobody's talking about in the news. It's all doom and gloom if you're watching the news. And that's just not the case here in our marketplace. So let's take that information. If we bought if we took a $500,000 house that we bought in January of 26, okay, that's projected to be worth $553,926 by 2030. So in those 4 years, right, we're going to make $53,000 just by living in the house. We didn't do anything else. We're just living there. Right? That's a pretty great investment. $300,000 house goes to $32,332. So obviously the price point matters. But just by living in your house, you're creating wealth. So again, if you're a first-time buyer, creating this process of wealth just by living in your house. And that means just by paying your normal principal and interest. Now, if you pay more on the principal, you'll get a little bit farther along. So a home purchase in Central Arkansas at that median price point of around $300,000 in 2026 would be worth approximately $332,000 by 2030 based on these projections. So that's $30,000, over $30,000 in equity just by hanging out in your own house. Okay, so here's the bottom line in Central Arkansas. Let's talk about it. If you're a seller, there's a window. This is a good one. Spring selling season is always a good one. Right now, it's an even better one. We still haven't hit those inventory highs, but we're moving in that trajectory. So getting in early makes a difference. For buyers, rates aren't going to drop. So buy your house and buy at a price point that makes sense for you. We're not going to see this huge downward trajectory of rates and then begin to build that wealth. Take the equity maybe that you have in your current house. Maybe you've got, I saw this just recently the other day. Somebody had, I don't know, it was close to $100,000 in equity in their house. So what they did is they sold that house. We put half of that as the down payment on the new one, took the other half and paid off their debt. They actually have lower monthly expenditures now after they bought a more expensive house than they did before because they don't have the high interest credit cards or the high interest car note. So all of those things work. Again, I'm Amanda Galbraith with Arkansas Property. Would love to talk with you more in depth about this. Can't wait to see you on the next one. Again, if you like what you saw, make sure that you like and subscribe below. See you soon.